Hey guys, and welcome to the Working Money Channel. Good morning, everybody. I just wanted to start off today's episode by letting you know that I made it into a TikTok video. The city's sketchiest bars. Yes, I had the pleasure of joining Bo Pinto on his journey to find some of the sketchiest bars in the city. Here I am there with Bo. I will leave the link to his TikTok in the description of this video if you guys want to check it out. I gotta say I had a good time, Bo. Thank you so much for having me out. And if you guys did not know, Working Money Channel also does have a TikTok. I have not been updating it regularly. However, I'm thinking I'm going to get back to it very, very soon. So again, just wanted to thank Bo for having me out with him now. Guys, after the halving, some people were expecting something extraordinary to be happening in the crypto space. I mean, we're getting there slowly but surely, but patience still is a virtue at this point in time. Ali charts here mentioning this. Okay, every time Bitcoin's MV/RV ratio falls below its 90-day average since November 2022. Okay, so that was basically the bottom of the market. It signals a prime Bitcoin buying opportunity with an average gain of 67%. And guys, check this out. We are here again. So Bitcoin trading under its MV/RV, but slowly coming back up. And, even since he posted this back yesterday morning, so that would have been Sunday morning, April the 21st, Bitcoin has actually moved up even further. As you guys can see, Bitcoin is now trading above $66,000 per coin. We did hit a localized high up here of about 66,500. So we're down a little bit, 66.1. But what we've been noticing since about Wednesday is that the Bitcoin trend has been moving up steadily for about a half a week. So that is positive news. We're not breaking below this level down in here, $59,000 per BTC. And that's exactly what everybody wants to see, for the trend to continue moving upward. As you guys can see, within the last 24 hours, we are pretty much in a sea of green, except for a few cryptocurrencies here. Mostly, though, the majority of altcoins have reclaimed some gains since that bloodbath that we saw a few weeks ago. Greed is at 62, so staying fairly steady over there at 62. We've got the market cap at $2.43 trillion. 24-hour volume, that's up a little bit to 7.17%. Bitcoin dominance still holding on, 53.5%. So Bitcoin is doing its part to bring up the rest of the market. We've got XRP right now, and XRP has also been moving up steadily. Right now, we're seeing an XRP worth about 53.533. So up a little bit since yesterday's video, but the excitement, right? It's that excitement that we're really trying to harness again. As of the time of this recording, the market cap at $2.36 trillion as per the total coin market cap chart here. And, when we do see crypto really kind of boom, like when we saw it back in late February, to mid-March, give or take, or, even when we did get the ETF announcement, we did get a bit of a correction before this first leg up. Guys, this, if you remember, was really, really exciting. Day after day, hour after hour, we were seeing gains for Bitcoin. And then this last pump to the upside, this was more of that parabolic type pump. And that brought Bitcoin up to new all-time highs, bringing the crypto market up to $2.69 trillion. So now we're eyeing $5 trillion. By the end of the market cycle, some are estimating $10 trillion. And so what are we looking at now? Under this model, the exponential Bitcoin bull run hasn't even commenced yet. This one coming from Willy Woo here. How the signal moved relative to the halving suggests this cycle may structurally be a blend between 2013, so strong demand, and 2017, spot dominant cycles. 2020 was a whip shot controlled by derivatives. So market prices in blue up here, guys. And if you look down here, this is signaling different parts of the market. As you guys can see, as this signal moves higher, we can see that Bitcoin price reaches new highs. And as we're noticing here, we're nowhere near that. This is generally, we usually see this during the halving part of the cycle, as we did back in 2020. And that dip here with a bit of a blip here in 2016, so the halving. So there is still a lot of room to go. An XRP whale has also just moved 100 million XRP, guys, stirring Ripple speculation. This one courtesy of DJ Peter Vass. So we did just recently see a massive transfer of XRP. That sparked speculation about the involvement of Ripple amid market volatility and the CTO's transparency assurance. 100 million XRP, guys, just moved from an unknown wallet to another unknown wallet. Notably, both the sending and recipient addresses were labeled unknown, stirring speculation regarding their identities. While concrete information is lacking, data suggests a potential link to Ripple, the San Francisco-based blockchain payments firm. So we do not have any confirmation on this, just that 100 million XRP has now moved. Some on-chain investigation did reveal a few things, though. This was a new address. The 100 million XRP movement marked the receiver's second transaction only, the first being a test transfer from the same sender. So it was a fairly newly minted address. Conversely, the sender, although also new, demonstrates relatively more activity than the receiver. The sender's address history reveals only 6 past transactions, receiving 12 XRP with Ripple at some point, with transactions implying an affiliation with the company. So there you guys go. Some more hints to suggest that possibly more XRP on the move for utility applications. Unfortunately, we do not have any more information on which company, but we will be keeping an eye on this. Wanted to thank DJ Peter Vast for pointing that out. Back to the narrative, though, with regards to the spec market and what some people have been saying now. Nick, Crypto Crusader, pointing this out. Okay, there's a narrative starting to go around that money won't flow into altcoins this cycle, and he's saying that's just ridiculous. I don't know if you guys had been hearing about this. But I mean, if here, I'm gonna bring up the total 3. Total 3 is all cryptocurrencies excluding Bitcoin and Ethereum. And I mean, even if you just look at the total 3 chart here, it would be pretty ridiculous to assume that money's not going to be flowing into altcoins. Since the bottom of the market back in December of 2022, we've already seen the altcoin market move up 134%. Okay, that's just the beginning. And remember, even at its high, that was after the retrace, at its high, it did go up about 175%. So I don't know why there would be this assumption that the altcoin market's not going to move this cycle. Nick continues by saying, I remember back in January into February, the idea that the money won't flow from Bitcoin into alts because it's in ETFs. People fail to realize how much money was in Bitcoin prior to the ETF approval. So remember that, even though there is lots of money into Bitcoin right now, because of the ETFs, the money that was in Bitcoin before was a whole heck of a lot. And, a lot of the people that were invested in Bitcoin and other cryptocurrencies in the past, they already have a grasp on crypto cycles and how money is going to flow. So he continues by saying money will flow into altcoins this cycle, and it will be one of the last major bull cycles due to regulations. So as per Raoul Pal, do not mess this one up. Quantfidential down here saying, they're thinking that purely because of ETF liquidity is segregated and didn't affect the rest of the market much. Eli Marty saying, as the market gets into full swing here, there will be so much FUD until they're ready to have the normies enter. Then that's when they're going to promote it. Then that's when we sell. Exactly. I'm going to be talking more about my selling strategies at patreon.com/workingmoneychannel. I do have the $10,000 plus portfolios you guys probably already know, and my legacy portfolio, which does include my XRP, my Bitcoin, Solana, HBAR, VeChain, a few other great picks that I've accumulated over the last several years. And it is only $5 a month. I kept it relatively affordable for you guys so that those who are interested in my trading journey can follow me all the way through. I'm looking to cash out for maximum profits this time around. No messing around. I'm not in this to mess this up. A bit of a 182, if you didn't notice, from the IMF, this one courtesy of Crypto Caesar. IMF now bullish on Bitcoin. The IMF says Bitcoin has become a necessary financial tool for preserving wealth amid financial instability. According to the IMF, residents of countries with restrictive financial regulations are turning to Bitcoin to move capital across borders more freely. So now the IMF, I don't know if you remember, they were giving Nayib Bukele a really hard time for making it legal tender in El Salvador. Well, now an about face, okay? The report that they put out was called A Primer on Bitcoin Cross-Border Flows, and that shed some light on how the decentralized nature of Bitcoin is being leveraged to bypass traditional banking systems, especially in regions experiencing economic distress or strict capital controls. And they're saying now that it's a necessary financial tool. According to the IMF, residents of countries with restrictive financial regulations are turning to Bitcoin to move capital across borders more freely. Here is a quote, guys. Whoops, let's get rid of that. Off-chain cross-border flows seem correlated with incentives to avoid capital flow restrictions. And I mean, you got to think, in many countries in, South America and Africa, there are already problems with their currencies being super inflated. So, the residents of those countries are just not using those currencies. So what do they turn to? They're turning to something more decentralized and something agnostic. So the report highlighted significant transaction volumes originating from countries like Argentina and Venezuela, 2 countries where they do already experience hyperinflation. In these regions, Bitcoin has become a necessary financial tool for preserving wealth and accessing global markets rather than just a speculative investment. However, the IMF report also cautioned against potential risks associated with the widespread use of Bitcoin for cross-border flow. So on the one hand, they're kind of backing off the negative narrative saying, no, 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 you can't use Bitcoin. It is not good. It is meant for criminals and thieves. And they're kind of softening up on that. But at the same time, they're saying, well, but be careful, right? Such clowns, if you ask me. Okay, I guess we've gained some ground there. The study did also review both on-chain and off-chain transaction data to explore the trends behind Bitcoin's use across borders. It found that Bitcoin transactions are not only substantial in volume, but also exhibit unique characteristics compared to traditional capital flows. So very interesting there. Unlike typical foreign investments that are sensitive to economic indicators like currency strength, Bitcoin flows show a higher correlation with cryptocurrency-specific sentiments, such as market volatility and user sentiment indexes, like the Fear and Greed Index. The other thing that just came to mind here, okay, I just literally thought of this as I'm recording this video, is that, that conspiracy theory that, Bitcoin was created by the government as an experiment to see how people would use it, and it took some time to really take off. Bitcoin's been around for over 10 years now. But they are noticing, so it's interesting now, and it's interesting that it's the IMF who's putting out this study, because they're analyzing Bitcoin, and this is what they're conveying. This is what they're seeing here. My guess, what my interpretation of this is that they're doing this study because they want to see, are the people of the world going to want to be using Bitcoin when the financial system does collapse? How many people hold Bitcoin? How many people can we control because they're not ready, right? So on and so forth. And, the countries that have already kind of adopted Bitcoin, like Argentina and Venezuela for their own reasons, are going to have a leg up in a lot of ways. You and I mean, if you hold Bitcoin or other cryptocurrencies, or precious metals for that matter, you have a leg up. If the dollar goes to zero, and it doesn't matter what country you live in, all fiat currencies, this is the idea of the controlled demolition, guys. This is what, if that goes to zero, will you be prepared? And it seems kind of suspicious that the IMF is now coming out and saying, okay, here's what Bitcoin is and here's how it's working in certain countries. Things that make you go, The US, though, not making it easy for citizens to get their hands on any cryptocurrency they want, and even in the custody realm. This one courtesy of Jack the Rippler here. An update with the Ripple SEC lawsuit, just basically stating there was no Ripple SEC related news on Sunday. The lack of news left investors to look forward to Monday, which is today, guys. Ripple is now on the docket to file its remedy-related opposition brief, but investors will not have access to the April 22nd filing and must wait until Wednesday, April the 24th for the redacted version. So we got to wait 2 days for that. Nevertheless, Ripple and the SEC could comment on the theme of the opposition brief. Ripple CEO Brad Garlinghouse and Chief Legal Officer Stuart Alderoty did comment on the SEC opening brief before the redacted version. In the opposition brief, Ripple must demonstrate that all post-complaint sales of XRP were to non-US institutional investors. Moreover, if Ripple proves the majority of pre-complaint XRP sales were to non-US institutional investors, Judge Annalisa Torres could deliver a token penalty ruling. The SEC filed its remedy-related opening brief in March, presenting arguments for a $2 billion disgorgement. As we have already realized, that is a pretty ridiculous sum, and there's no way they're going to be retrieving that $2 billion. They're going to get the redacted version in on Wednesday. We get to see what is in that brief. On top of which, Michael Branch bringing this to our attention, an article from Fox News. The SEC is hit with a new lawsuit alleging mass surveillance of Americans through stock market data. So yes, the SEC wants to illegally collect data of every citizen who invests in the stock market. And don't for 1 minute believe that this is not going to be extended to crypto. A new Civil Liberties Alliance filed the suit Tuesday against the SEC, claiming that the agency, through its Consolidated Audit Trail, or CAT program, is collecting mass amounts of personal identifiable data by forcing brokers, exchanges, clearing agencies, and alternative trading systems to capture and send detailed information on every investor's trade in U.S. markets to a centralized database. So you see how this is all correlating, right? It's all making sense to me. If it does come down to a controlled demolition, they want to know who has what. They want to put everything on the blockchain first and foremost, but they want to know and keep track of who holds what and how those people will be able to use their assets in order to survive, basically. If most people have their wealth in dollars, US dollars, or any other fiat currency, and they go to zero, you got to think about that for a second. That's not going to be good for those types of people. But if you've diversified into cryptocurrency or something different, they want to make sure they can keep tabs on you, which makes sense for this. And I don't know if this is about what I'm thinking it's about, but anyway, here it is. From Jake Chervinsky, bad news, despite years of industry engagement with the IRS explaining why unhosted wallets can't be brokers. The message somehow hasn't landed. The good news, rules that make literally no sense at all rarely survive scrutiny in the courts. Great news, though, we really like filing lawsuits. So I think this is about self-custody wallets and how the US now wants to ban them or at least keep tabs on your self-custody. Again, makes more sense now that we're seeing, the fact that the SEC wants to surveil Americans through stock market data. And also, the fact that the IMF is putting out another report looking at Bitcoin and understanding, even if it's not in the US, how it's being used worldwide to offset financial woes. Things that make you go, for sure. And then on top of which, this is just the icing on the cake, the BIS, as I was talking about over the last few days, ushering in the finternet. What is the finternet? I guess maybe we should delve into it a little more.
Have you heard the term finternet? It's not a new crypto nor a new meme coin. It's actually a term that the Bank of International Settlements, BIS, has come up with. What is it all about? It's a new narrative, and it matters because think of it, money is a narrative. It's the best story that we've all bought into, and it shaped our financial systems and our economies. So what is finternet? Imagine a world where you can transfer any financial asset, anytime, any amount from any device instantly. And how does that happen? It's all about tokenization. So central bank digital currencies, tokenized deposit, tokenized assets, smart contracts, atomic settlement, ledgers, and so on. Finternet, the new narrative.
That lady's kind of scaring me. I'm going to be real with you. The Bank for International Settlements, BIS, has coined this new intriguing term. This coming from ISO 20022. And somebody down here, Ken, was asking, who the heck is that lady? Well, it is Effie Pilarinu. I'm guessing she's Greek. So we've heard Augustin Karstens talk about the finternet and, the BIS putting this out now front and center. Another brief article here on the finternet from the Bitcoinist from Michael Branch, from Bitcoin.com. Again, I touched on this the other day, that the BIS did recently issue a new paper coining the term the finternet as an interconnected financial system. So the finternet refers to a series of linked systems that seek to integrate many financial functions in one network. As we heard Ellie say, the paper defines finternet as multiple financial ecosystems interconnected with each other, just like the internet, designed to empower individuals and businesses by placing them at the center of their financial lives. Boy, you see how they're putting that positive spin on this. Now we can see too how the BIS's concept of the unified ledger fits into all this. At a point, we thought that it could be one ledger that rules them all. Now we're finding out that it's going to be multiple ledgers, DLT technology, including the XRP ledger, that are going to be moving all the money, guys. Yes, all the money around the world. So this is getting very, very interesting very, very quickly. And so I wanted to thank Michael Branch and ISO 20022 and Jake Chervinsky for posting those. Smoke here, guys, bringing this up as well. Now, this was an older Swift conference, but notice how the narrative is shifting as they're saying, the finternet is now the new term, the new buzzword that they're using, and DLT technology to be at the forefront. Well, even Swift has been shifting gears. This was from their Sibos conference, their very last Sibos conference, discussing how they're in fact pivoting, guys, leveraging Ripple technology. Listen to this.
When we think about our business model, is that we've got to simplify things. We have to take as many players out of the chain as possible. And I think that it caused you to step back and rethink. I think 20 years ago, if you wanted to move money across border, you automatically think about a nostro and bostro arrangement and getting a correspondent and sort of going down that route. Now, as Charlotte mentioned, Visa has products. Ripple has options. There are myriad options out there to think about how you move money around the world on behalf of your clients. And so that's changed our mindset.
Visa has clients, Ripple has clients. Coincidentally, they are two sides of the same coin because Visa is partnered with Ripple. So on the one hand, we've got Swift saying that, but here, guys, a direct mention from that same Sibos conference. Listen to this.
Again, how has the past few years really impacted the idea of ecosystems, your collaborations, your partnerships, and even acquisitions? And then has that actually changed via region?
Yeah, as I said, we basically accelerated our total journey into the payment space. While we were experimenting in the beginning with, as I said, with Alipay Hong Kong or with GCash in Philippines, we very early on had in 2015 we started a partnership with Ripple, where we experimented, or actually give, as more than an experiment, we give possibilities for corporates to do cross-border payments.
So early on, a partnership with Ripple. Again, getting rid of the Nostro and Vostro accounts, moving towards DLT technology. Ripple was the only player in the space at a certain point. And this just in too, guys, from the Monetary Authority of Singapore. Wrath of Kahneman following. Ripple's response to the MAS's consultation paper offers some context for businesses in the paper, which I do have linked here. This is just from this month, April 2024. And so these were just some amendments from an older draft. But guys, check this out. Ripple is noted here as being an important DPS service provider. As I state here, and I quote, "It is also important to note that Ripple only provides DPT services at the enterprise level, and we do not have any retail customers." So back to this point of Ripple and RippleNet, although it can be used at the retail end, is meant for institutional grade and enterprise grade clients, guys. This is focusing on not millions of dollars, not even billions, but trillions potentially, as being part of this new financial system. Think of it now taking over some of Swift's business. How much money is processed through Swift every year? Swift serves as the primary interbanking messaging service for financial institutions globally, guys. It works with 11,000 member institutions and facilitates $150 trillion in transactions per year. So just think about that for a second. DPT services and enterprise level solutions, not for retail clients. Do you really think XRP is going to stay at 53 cents forever? I think it'd be remiss to believe so, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. And check out Bo Pinto's video where I make an appearance on TikTok. The link is in the description. And guys, I'll see you in the next one.